At this stage of the global cycle, the economic outlook remains supportive of risk assets. Global growth, though slowing, is set to be far above its long-term trend rate of 3% this year and next, as vaccinations allow activity to rebound post-pandemic. Major central banks largely remain dovish, expecting inflation to be transitory as economies reopen, while government bond yields continue to be at historically low levels. But as 2021 draws to a close, the global recovery faces significant challenges. Firstly, increases in inflation as economies reopen are proving more persistent than central banks expected. Consumer prices have rebounded on soaring demand for goods and services, but the supply chain has been hindered by bottlenecks, labor shortages, and higher energy prices. This has led to inflation running above the 2% targets of several major central banks. Hence, investors are fearful that the Federal Reserve will abandon its dovish stance if inflation doesn't start subsiding over the next few months. Secondly, energy prices are surging, adding to inflationary fears as rapid demand increases are met with stagnant supply. Thirdly, fresh virus cases continue to flare up around the world. The threat of a winter COVID-19 wave in the Northern Hemisphere remains a significant risk. Fourthly, China's V-shaped recovery from last year from the pandemic continues to soften this year amid power shortages that have hit industrial production. Despite these risks, we see the economic outlook continuing to favor risk assets. We think it is unlikely that China's economy will suffer a major downturn that would hit risk assets globally. Also, the Fed is keeping its dovish stance on inflation and will only turn hawkish if inflation expectations increase sharply above its 2% target or if inflation remains well above 2% next year. Our view is that risk assets will continue to benefit during this window of low interest rates as the Fed and other major central banks stay relatively dovish for several more quarters yet. For more information, please read the latest edition of our monthly investment guide titled Stagflation Risks in Check.